for chart busters then. What is it that our chartists are betting on and which are some of their top recommendations? Well, let's begin then with Kunal Bothra. And Kunal, discuss the chart price of Z Entertainment. Meteoric rise that we've seen nicely from the levels of about 250 now all the way up to 270. Do you think one has missed the bus and what are the trends looking like?
Thank you, Aman, for that. So, I think it's an interesting chart because actually, when I was looking at the charts and the patterns for Z Entertainment, even I was, amazed with the kind of observation. So, the first observation is that the stock is now coming back towards its 200 moving average. Now, what is the relevance of 200 moving average? This blue line, as you can see, is the 200 DMA for Z Entertainment. And whenever the stock in the last 3 to 4 attempts has managed to come back and cross the 200 moving average, it's led to at least 1.5 month of rally for the stock price. So from this point, the stock rallied up almost 10 to 12% in a matter of just about short-term time span. This was the big breakout in September 2021, where the stock had broken past about the 200 levels and then rallied up to almost 350 plus, which is a return of more than 75% for the stock price. Even over here, start of 2022, month of March, April, the stock had jumped up about the 200 DMA, rallied up more than 20% in a short span of time. And now we are back again in terms of crossing distance above its 200 DMA for Z Entertainment. So if you go by the last 3 attempts, there is a very strong likelihood that Z could be a big breakout candidate from a near-term play, and expecting a very similar kind of a move, a 10% upside over the next 1 month for the stock.
All right, let's get top recommendations going as well then. And Kunal, what makes it to your list on Chartbusters?
So a couple of buy calls which I would want to suggest at current levels. The first one which I'm actually suggesting is a buy on Balkrishna Industries. That stock looks attractive on the short-term charts and now is forming a good base for itself. So buy with 2150 as a target, stop loss at 1950. And the second one which I'm suggesting is a buy on TCS. That stock as well seems to be coming back towards its breakout point, 3420 as a target, stop loss 3190.
Okay, let's move on. Kunal, thanks as always for joining in with all the chart busters and stock-specific ideas. We'll see you again at 2:30 p.m. Let's focus now on JK Cement and let's try and get the outlook on the sector, the demand and pricing strategy, what kind of volumes and realizations have they been clocking off late. We have with us Rajnish Kapur, the Chief Operating Officer of the company, joining in right now of the grey cement business. Rajnish, hi, great to have you on the show. Channel checks, have been suggesting that after 3 to 4 months of decline, cement prices have been hiked in September. Could you confirm that? And could you also tell us if, the pricing is trending actually upwards in the next few months as well? Or do you see that happening?
Yeah, good morning. Thanks for having me on the channel. Yes, price, we as we talk today, we must understand that we are just exiting the monsoon season when the prices tend to fall down. And just to give you an idea, where we were in the month of May, and I'm talking of North, where we have our major operations for our business. The region where we were in the month of May, we are almost about 35 to 40 rupees down per bag in North in terms of price. And therefore, as the monsoons recede and the volume demand starts picking up, we would see a price increase happening. We have to also factor in the point that probably Q2 of this year is going to be the highest in terms of costs for a very, very long time. And therefore, there is quite a bit of pressure on the industry at this point of time to start recovering some of the losses that we are making in terms of huge cost increase. So yes, September onwards, I do see prices coming up. Just to give you a backdrop, of the year so far, in Q1, we saw the realizations increase by about 6 to 7%. But in May onwards, the rollback started. And we saw May onwards, July, August, there were slippages of price all across. And as we talk, in some regions of the country, price increase seems to have settled down. I am told that in East, there has been a price increase, though we don't operate in East. In South, some price increase has been attempted. And in other parts also, a lot will depend on how the demand plays out.
Do you anticipate demand shaping up?
Say again?
No, I'm wondering how you're anticipating demand shape up because like you said, the input cost pressures are obviously going to, see an uptick on realizations. Do you think that's going to impact volumes, the price hikes?
So I would put it like this. See, I think the demand story for India is very good because both in terms of the requirement of construction activities to be done at an individual house owner level, as well as the infrastructure push that the government is giving in terms of roads, in terms of various metro projects and so many other projects happening. As also, do not forget that we are going to enter the last 18 months or 24 months of an election year. And generally, before the election time, a lot of projects tend to be completed, and therefore there is a speed up. So I don't think that the demand is going to be impacted. I personally feel that in the current year, we will end up with approximately about 7 to 8% kind of a demand growth. So far in the year, the Q1 we had a great volume demand increase in terms of 15 to 17% for almost all the regions of the country. And in South specifically, the demand was pretty high, with some companies clocking a demand growth of between 30 to 50%. July and August, we have seen a muted demand of about 2 to 3% growth. And in September, I expect this is going to pick up. So I feel that the Q2 might end up at a 4 to 5% kind of an volume growth. But Q3 onwards, I see no problems as far as the demand is concerned. So I think the demand part looks to be quite okay.
Okay, so demand part is looking okay, but what about the margin picture? Because given the fact that there have been price hikes on one end and on the other hand, input prices are coming down, could you give us some indication of how EBITDA per ton is likely to move?
So I think EBITDA per ton this quarter is going to be the worst that we have seen for a very long time. And if I may just put it, in absolute number terms, I think across the board for all the companies, we will see a 300 rupees to 400 rupees drop in EBITDA in Q2. This is because of two factors. One, the realization drop that has happened as compared to Q1, which I just mentioned. And second is the cost increase that has taken place. And the cost increase, just want to give you a bit of a backdrop. In Q1 of this year, we saw a pet coke price increase of 43% quarter on quarter, and a diesel price increase of 10% on an year-on-year basis. And therefore, the power and fuel cost per ton for cement industry, depending on, if you are holding on to an old inventory at a cheaper cost or something, on an year-on-year basis, it increased by 50% in Q1 and 20% on a quarter-on-quarter basis. And this further maxes out in Q2 of FY23. And I think there is going to be a cost increase of, on an average of 200 to 250 rupees per ton for all the, generally for the industry. But the good news, as you just said, that the prices seem to be cooling off. The good news is that the domestic pet coke, which peaked in June 22, has dropped 30% in September and is close to about 16,000 rupees per ton. And the US and Saudi pet coke, which peaked in May 22, is 40% lower now in September and is sitting at $160 to $165 per ton. And therefore, that should help us in further improvement of costs in the coming quarters. So in Q3, I visualize a 250 to 300 rupees, savings on the cost front. And if the realizations increase, so we should start getting back to Q1 levels. When I'm saying that, I think one has to be very cautious of the fact that the energy prices, the fuel prices are being, guided by what is happening on the international markets in terms of the Ukraine war effect, in terms of the energy crisis across the globe. So a lot will depend. But if we look at the trends which are there today, I think that after Q2 bottoming out by about 300 to 400 rupees as compared to Q1, we'll start seeing recovery from Q3 onwards.
And Mr. Kapur also wanted to kind of shift gears and talk a bit about the entire industry as such, because we have seen some big competitors entering this space, and also we have heard about capacity additions happening from bigger names. Do you think this leaves room for a lot of smaller and mid-sized cement companies to get consolidated?
No, I think that is a matter of conjecture for all of us. I think there has been a very good consolidation taken place by Adani taking over Lafarge Holcim, because I personally felt that over the years, Lafarge Holcim was always a very reluctant kind of an, participant in our cement industry in India. They were not looking at growth, and there were so many other aspects. So therefore, with Adani coming in, I think there is going to be a new drive in the industry, both in terms of cost pressures, and they are going to, actually activate all other players to start looking at costs more closely. There have been a lot of capacity expansions announced by some of the big players. Ultratech, Dalmia, Shri, Ramco, ACC, Ambuja also. So we do see that a lot of, expansion in greenfield or brownfield expansions are going to take place. But my feeling is that the way we look at the industry demand growth at about 8%, I think the capacity addition would also be somewhere in the region of 6 to 8%. So to some extent, I will, bring down our estimates of the demand supply gap, which we were thinking were going to really thin down. And they might not thin down as speedily as we were thinking earlier. But I see no pressures on that part. And I feel that the way the growth story of India is, even with all these expansions, I think the industry should be able to hold on.
Thank you for sharing with us the outlook on recovery, volume growth, as well as how you're looking at the overall competitive intensity within the sector. That's the word coming in from the management of JK Cement.